All right, hope everyone's having a nice weekend. I'm looking forward to this weekend's market update. So for the agenda today, we're going to go through Bitcoin denominated in SPY, Bitcoin denominated in oil, USDT, market cap dominance, NASDAQ, the dollar as it relates to Bitcoin, the 10-year US oil, and we're going to call it a day. The first chart that I have up here is a weekly chart of Bitcoin denominated in SPY. And objectively speaking, what we can see here is the most bullish presentation of Bitcoin denominated in SPY that we've seen really since September, October of 2020. That's objectively speaking. This is not subjective. And why do I say that? Because there's evidence in the chart that technically speaking, when you look at Bitcoin denominated in the ETF SPY, the S&P 500's ETF, that there has never been a time, especially since the November 22 lows, where it was more valuable in priced in those assets than it is now. And it's never been stronger priced in those in that denominator as it is now. And let's just review the evidence. Well, the evidence is here on the chart. I've got the 30-week moving average for those of you that follow me. For the members and my subs know that I go into frequent updates on exactly how I use trend analysis, Wyckoff, Elliott wave, kind of in combination to arrive at a conclusion. And if we're using the 30-week, which I've got here, right, to kind of inform where we are in terms of the trend, we see that coming out of the lows where, again, this is where I started doing my videos for those that remember me. I was claiming this is an accumulation spring event, sign of strength, Elliott wave 1-2, flat correction. And this was the point of early stage expansion within the micro accumulation, reaccumulation / accumulation out of this downtrend. And so coming out of there, the technical picture from a trend analysis standpoint wasn't as strong relative to, let's say, where it is now. What do I mean by that? Well, we still had a cloud that was red. Okay. We still had a 30-week that was breached. But again, we came back and touched the bottom of this red cloud here. I mean, this Ichimoku cloud, by the way, took 30 years to formulate. If this isn't on your in your top three in terms of weekly time frame, put it on there. Look at it on every asset that you're covering. I mean, to a T, it stopped there, right? Then we got a bump up against the 30 and no retest. You know, everyone wants to look for nice, clean, easy, oh, check back, give me a retest. No retest. It went. And our next area of consolidation then did something very similar. But it was technically stronger. Why was it technically stronger? Because where this structure was in relation to the accumulation structure, okay? In relation to the sign of strength consolidation. We had a little reaccumulation here. We had a large reaccumulation here. We had a 30-week that started to flatten out, and we bumped up against the cloud, kind of consolidated in against it. It's kind of smashed up against that in the 30-week, and then it exploded out of it. Now, the big difference between, again, this is kind of weaker, right? If you're just looking at technicals, and that's, again, one of the reasons why, for those that haven't followed me for a while, I'm not a financial advisor. I am not talking about trading in and out of Bitcoin. I am not talking about using this for anything that other than your education. I could be wrong. These things could go up that I talk about, down, sideways. My conviction in Bitcoin, the number one holding is, that we're talking a 10-year hold here at a minimum. I hope to never sell it. I hope to pass it on. But when I say weaker, I mean, if you're just looking at technicals, to me, this was strong. This was very strong. But I'm just saying, if you're looking at technical evidence, weaker, a little bit better. And then what did it do? What did it do in November? It did what we were expecting it to do. Break into a macro expansion after this huge reaccumulation event. That's what this is. Rounded bottom, cup and handle, whatever you want to call it. A rounded bottom on a high time frame, a cup and handle. These are just uh, other ways to describe massive reaccumulation events. And in the context of a massive reaccumulation event, what has happened since we broke out? Well, we've now been consolidating against SPY. Check back to the 30. Notice there isn't any breach here. Notice that 30 weeks pointed up. Notice all the space between the cloud. This right now, as it's, and it doesn't mean that this isn't going to go back under the 30 or this couldn't go into the cloud. I'm speaking as of today. As of Friday's close, objectively speaking, this is the most bullish Bitcoin has looked against SPY since the lows, since November of 2022. And the asymmetry is presented in this technical setup is this region up here. Excuse me, okay? If we're looking at, this is the accumulation range, this energy being released, I would expect it to be released in some fashion to the tune of 3x, 2 to 3x against SPY to the upside. And by the way, what do we have actually occur on Friday? If we're zooming in, we're breaking out. We're breaking out against it. Okay, that's what we have. We're breaking out against SPY. And so, does this mean the equity markets are fine? And I don't know. We'll look into that a little bit later today, or sure, we could get some short-term weakness, but what this tells me over the long term, this is a 5-year macro reaccumulation. That the high time frame macro forward from here presentation is very much in favor of Bitcoin against SPY. Now let's do the same exercise when we look at Bitcoin priced in gold, and it's very similar. Not surprising, we see the same type of high time frame, massive reaccumulation. Okay, flattening out, starting to coil up. Every run, every consolidation back, checking back, has gotten progressively stronger along the way. Where's the evidence for that? Well, our first check back against oil breached the 30, actually breached the cloud, reclaimed, and it went the other way. No checkbacks. The next check back here, we didn't touch the cloud. Okay, no exposure to the cloud, but we consolidated in and around that 30-week for the better part of what? July through October. It's almost 6 months. And now where are we? We are, what are we, from February, 1, 2, 3, 4, 5, 3 or 4 months we're working on a consolidation here. And potentially looking at a breakout against oil. I say potentially because these things have to confirm and show us the way. Could we get a fake out back down and then a consolidation? Sure, something like that most certainly could happen. But objectively speaking, right now against oil, Bitcoin has never looked stronger since the lows. This presentation is the strongest it's looked. If we then look at market cap USDT dominance, okay, so this is the amount of stable coins in the crypto ecosystem on the sidelines versus in the assets. And I've been covering this chart for a while. I first made this chart, I don't remember exactly. I believe I made it somewhere in this range when this became a bit clear to me on what I believed was going on, and that is a high time frame distribution where we had the buying climax into June 2022. FTX low was an upthrust in phase B, and this is inverse, right? So the higher the market cap dominance, that means the more money that's pulled on the sidelines, pulled out of Bitcoin, for example. And so up thrust was the FTX low. You had an up thrust after distribution. In June of 2023, a test, kind of like we see this image up here. And then we started this markdown, last point of supply, sign of weakness, check back to last point of supply. Just notice where these structures are looking right. I mean, this bearish pennant, huge bearish flag. It's the opposite of what we saw during the bear market, where you had flagging structures on USDT, right? Flagging structures. Like this is bullish for USDT, bearish for Bitcoin. On the other side of that, we have the opposite going on. We have these, checkbacks and these bear flags, consolidations. And so when this runs its course, my belief is that the next major move comes for Bitcoin. Right now, if we're zooming in, let's zoom in on the weekly. What do we also see here? I have MA. What MA is this? I believe it's 100. Yep. Weekly MA 100 in red. Okay. That's this right here. Rejection. Okay. November 2023. Impulse for Bitcoin. Rejection. August 2024. Cloud rejection and MA 100 rejection. What was that? That was the low. August 5th or whatever, that week. We had a check back to it, rejection, and then impulse. Bitcoin went from what, 48 to 108? And now we're checking back. Where are we? Rejection so far, one rejection. Doesn't mean it can't come up. Cloud pointing down, cloud turning red. Doesn't mean this thing can't pop through, right? But I'm expecting continuation in that form on the high time frame macro. So from a USDT perspective, this chart right now is where we get max bullish. Okay, basically what I'm getting at is this is where we get max bullish. This is where we get max bullish. I've been upping my exposure and kind of getting into that with the members and subs in terms of the proxies as we get up into this range, right? Gaining swing exposure for me is a process. It's not a 1 day, 2 day, 3 day, 4 day event. It's a multi-month event. So this is where I'm getting the most exposure to swings, and this time isn't any different. Does that mean it's going to happen today, tomorrow? No, it happens on its own time. That's why I want to be positioned moving into it prior to, because I don't feel like I can get properly positioned once these things confirm. And that isn't financial advice either. Just because I'm doing that doesn't make it the right move. We're going to find out after the fact. All right, NASDAQ. NASDAQ, we've been following this chart. Objectively speaking, last week's move wasn't the greatest in terms of we made a lower low. So that's just a change in character in this market. But we also did that during the COVID drop. And, from a fear perspective, the market is, so we did the same thing here. Okay. We swiped these lows to make a lower low back in March of 2020. Fear was at that point where we are now. Okay. But it's too early to say anything is happening other than what the market has shown us for the last 7-8 years, which is at these levels of fear, at this level of acceleration to the downside, to be expecting a V-shaped recovery. Does it start Monday, Tuesday? I have no idea. When you see this kind of selling like we saw in 2 days, typically it takes a little bit longer to resolve. So I don't know. I can't say, and I'm not going to speculate. But what I can say is that if I was expecting some type of shift in the market, I would need to see the evidence in the structure. Okay. Just like I keep pointing to here, we had our last major trend change when no one was fearful. So it developed when people weren't aware. We went into the cloud. So same kind of place we are right now, but we had a relief rally and you saw it rejected on the 30-week. And so then you had your break in structure. And so a change in character isn't enough. Okay. Then a relief rally. And then, so from the point where we had to break in structure April of 2022 to October, so April, May, June, July, August, September, October, 6 months of further downside from that break in structure. And so that's what I'm getting at is you can't just say the market, we're in a bear market because technically the NASDAQ dropped 20%. No, by definition, I need more than that. I need more than just, a percentage drop. I need something like this. Show me something like this where, okay, we have a little ABC here. Give me an ABC into this 30, okay? And then give me something like that. Break the market structure. Break the market structure. Show me the beginning of a new high time frame trend, and then I can entertain, okay? Then I can entertain that. But right now, that's just speculation. And so the base assumption is wherever this thing ends up is a V-shaped recovery until I see any of these other conditions, which I haven't seen yet. So I'm not going to speculate. If I'm looking at the dollar, again, folks, the reason why I focus on Bitcoin the most is because it's what I believe is has the most potential long term as well as short term. And this chart shows a short term what I'm talking about. If we go back to 2013 and we look at this is the monthly on the dollar monthly chart, and we look at when the dollar has undergone a buying climax. Okay, so an uptrend, buying climax, and then it starts a distribution. I'm here in 2016, and then you get this upthrust after distribution, basically a failure to break out, and it goes the other way. So it's these upthrusts are really powerful. They get people thinking that a new trend or continuation of the previous trend is underway, when in fact it's the opposite that's underway. And so you get, like we saw here in 2017, May 17, that failure, that upthrust. And at that point, that failure, kind of where we are, I'm claiming now with Bitcoin and the dollar, Bitcoin did a 7x. Okay, Bitcoin had a massive reaccumulation event while the dollar was doing all this. Okay, and then broke out to the tune of 7x from that point. And then downtrend in the dollar, and then new uptrend, redistribution, upthrust, failed, right? Test, and then breaking down. And similar, what did Bitcoin do? Reaccumulation. And in that moment, after the failed upthrust, at this, what MA is this that I have up? Let's see. I think that's the 50. That's a 50-month SMA. Bitcoin then broke out to the tune of 5x. So where are we today? Where are we today with the dollar and Bitcoin? I just posted this chart on X. Let's zoom in a little bit. Well, we are at a point where the dollar was in a strong uptrend. And what was Bitcoin doing? Reaccumulating, handle, cup handle, whatever you want to call it. Then we got a distribution, upthrust, fail, right? Back in the range. Now we're in the cloud at this 50 MA. And so the setup here for me has to be an expectation of multiples higher. The previous two, 5 and 7x, I have no idea. My conservative targets are between 300 and 400K, but it wouldn't shock me if we went even higher. Given why do I say that? Well, this reaccumulation structure on Bitcoin, objectively speaking, is this one is bigger and stronger than that one. More closely resembles what we saw in kind of 2017. So this is again where I'm getting max bullish. Let's see, to 10-year. So I've had this one up for a while, been claiming this has been going through. And mind you, folks, you don't hear me talking about tariffs and things that I hear from the media, because that's narrative. And when I hear something from the media or a feeling that that's supposed to be instilled on me, I typically think the opposite is what's going on. Okay, I don't know. I have that contrarian mindset, and so when I hear inflation is now going to go up because of this tariff talk and potential implementation, and I don't even know if they're implemented or going to be. I don't follow that stuff. I'm following this chart. This chart tells me the 10-year is falling, and I've been saying this since this region. This is the path that I kind of outlined, for the last few weeks where we've had this bear flag, and I've been saying from this 436 region, I expect us to get down to 3.7 pretty soon, sometime in the next few months. We tagged 3.8 last week. And so I don't know, does it keep consolidating here? Who knows? But this is the way that I'm seeing this thing go, where the sign of weakness is in front of us and then potential markdown after that. And so to me, yields look like they're coming down, look like just like the dollar towards the end of a larger scale distribution. Oil, I posted this chart in February in my Twitter subs account. I think at the time we were here, okay, in this region. And I said, again, this looks like, whatever anyone's saying about inflation expectations, I don't know. This chart is telling me that the price of oil is going down. And this looks like, again, little late stage sign of weakness of a complex redistribution where we have ranges, we have consolidation under the 30-week at this range, failed breakout, now we're back under, and now we just fell out of the range. That just happened last week. And so this tells me we're in markdown territory. Could it check back up to here? Absolutely. 72, we've seen that before, where it gets back in the range, but I think the high time frame on oil is down, marked down. Okay. All right. Well, I hope you enjoyed that. Got a couple more videos coming out for the members. Today, some low time frame speculation on Bitcoin. And I think I have a request from Mara, so that will come out as well. Hope you have a great rest of the weekend. Take care.